Javier, what is the consensus as you're in Davos on both the carbon emissions and some of the targets that we keep talking about?
One of the consensus is that the shareholders are really care now about climate change, and they're pushing oil companies to reduce their emissions. And I think that this is the first time that the industry is starting to react to that, not just only the European oil companies that over the last few years have been reacting, but also you see American companies getting the message and realizing that if they want to keep shareholders on board, they're going to have to start to find ways to reduce the intensity of the emissions and perhaps to cut the overall emissions from the oil and gas industry.
And Javier, you know, it's interesting. Davos is known for a lot of billionaires and smart people getting around and talking, but sometimes not getting actual specific goals. What's new this year versus previous years on some specific initiatives that we're talking about?
I think that the one thing is the intensity of the debate. The executives have put climate change really at the top of the agenda, and behind closed doors, the executives are now talking about more broader definitions of the emissions that they need to cut. So they reach agreement and they move into that direction. It will mean that the oil industry will be taking a more aggressive position towards reducing CO2 emissions they have taken until now. And that will be probably forcing them to also retool the business model, reduce the dependence on oil, invest more in gas, and certainly start to move into electricity.
In return, how is the energy industry responding to those?
Well, that's a key question because I think that the big problem is, can the oil and gas industry do all what shareholders are asking and at the same time continue paying those shareholders the big dividends that they have been paying in the past? And I think that that's a question mark. I think that the executives don't know that, and I think that the shareholders also don't know what the consequences in terms of money, in terms of dividends, in terms of returns will be of the specific actions that they are requesting.
We're also getting a resolution and a signing of that phase one trade deal. We know that phase one was really important to the commodity industry, to a lot of farmers here in the U.S. What has been the reaction so far to phase one of the trade deal?
Well, everyone I have spoke here in Davos say that it's positive, of course, that China and the U.S. were able to agree on the phase one, but there's a lot of skepticism that this agreement is going to translate into the big boost in agricultural exports that President Trump has promised. I spoke to the chief executive of Cargill, the Midwestern company that is the largest agricultural commodity trading house, and Cargill believes that the damage is done, and it's a damage that is going to be permanent because China is going to be seeking to diversify where it buys the soybean, the corn, and probably Brazil and Argentina are going to remain the big beneficiaries, and the American farmers are going to remain the losers despite the agreement that it was signed recently.